Hey, Sean McMahon, man, Mortgages by Sean. I'm here with the rate update. So the Federal Reserve lowered a quarter point on Wednesday. I made a video on that. That was expected. The market had that factored in, but it's all about what's said afterwards in the press conference. The press conference went well. It was more of a dovish tone and less of a hawkish tone, which is the way it normally is. And mortgage rates reacted positively. Normally, they go in the opposite direction. But Powell did a good job at his press conference, and it was more dovish. Not so much about inflation, even though, look, there's two things the Fed's looking at going into 2026 if they're going to lower rates. Number one is inflation. And that number at 2.8 right now is too high. It needs to drop. So they're going to be watching that. Hopefully that will drop. And number two is the weakening job market. That's not good for the economy. Higher unemployment, that's not good for individuals, but it's good for mortgage rates. So the weakening job market is a good thing for mortgage rates. So they'll be really focusing in on that going into 2026. There's probably only going to be a couple cuts in 2026. Currently, we're at 6.26 on an overall average 30-year conventional. Remember, these are averages, not specific rates. 5.88 on FHA, 5.90 on VA. Government rates under 6. If you got a FHA or VA mortgage last year and it's in the high 6s or 7s, you may want to think about refinancing. Reach out to me. I can run the numbers for you. Conventional wise, we're getting to that point where you really want to think about it. If you had a rate in the 7s, mid to high 7s, definitely take a look at it. Reach out to me. I can run the numbers for you. If you have any questions, always feel free to reach out to me. If you want to get pre-approved over the weekend, I'm available. Have a great weekend. Thank you very much.